Good afternoon. This is coming to you from the floor of the CME Group. We are looking at FX and the euro currency. Still within the range. We set that range very early in the year between 120 and 125. Although last week we traded below the 100-day moving average for the first time this year, and we are today nearing the 200-day moving average. We're still not there yet, and we are still within the range, but things are starting to take a little bit of a bearish turn for the euro, which has seen a pretty good run. Going back even to the beginning of 2017, it has been pretty much a steady, straight shoot higher, and we seem to have found a top at 125, and we're just kind of hanging in this 120 to 125 area. Things may change, though, if we trade back below 120 from a technical perspective, if the dollar continues to see strength because of the fact that obviously we've got a little ways to go down, and once we trade below the 200-day moving average, things technically could get ugly. We're not there yet. And if you look at what the ECB said today, President Draghi came out. Nothing really surprised the market. I think initially the euro maybe took back some of its losses, but quickly reversed. The idea was that he was going to say something hawkish, that maybe they were going to trim their asset purchases at a sooner date, maybe at a larger quantity, maybe with the economy doing well, that things could maybe change, but alas, that was not to be. And so their asset purchases will remain on track, at least through some could be in for fall, but right now that is the plan. So the ECB didn't really change, didn't really give us anything to sink our teeth into. So that, the market just kind of in the euro remains same, obviously with a bearish tilt, but still remains within that range. And lastly, let's talk about Brexit. How could Brexit moving forward? A lot of uncertainty there, whether you're talking about the British side or the Euro side right now, whether it's the tariff talk, how it's going to affect Britain, or you have on the Euro side, you've got the financial center in London. How will that be affected in the banking system? So there's still a lot of uncertainty. It's something that should have been probably settled by now, or at least on the path to being settled by now. It's been well over a year, call it a year and a half, since the Brexit vote. And things are still very unclear right now. And with the Bank of England now looking to possibly raise rates sooner than later, and with the ECB possibly maybe kicking the can down the road a little longer, you could see a flip-flop in those two currencies, the pound and the pound euro cross. But right now, everything seems to be kind of status quo. And as the dollar continues to gain its bid, whether it be because of unwinds of hedges, whether it be because of strength in the U.S. economy, whether it be because of more hawkish Fed policy, or none of the above, but the dollar just catches a bid for the first time in a year and a half, that may also throw a wrench into both currencies. But right now, the euro is still holding in that range, that 120.25 range. 120 is the 200-day moving average as we speak. That level gets breached. Look out, it could be a long fall, but we are not there yet. This is Todd Colvin coming to you from the floor of the CME Group.